It has remained evident over the last week of trading that the Dow, once it broke up through the resistance level of the 50-day moving average, has been using it as support. So as long as the indexes stay above the T line, let alone the 50, it's got to be assumed that we're in an uptrend. But this also provides a very clear alert for when the selling might be taking place. As we can see, we've got dojis up here in the overbought area. Either we're ready to do a J-hook pattern with providing more upside, or if they start selling it off, we can assume that the 50-day moving average area was acting as a resistance level. This tells us that if we start seeing weakness in this area, we can start taking profits in any long positions that we've created during this uptrend and start thinking about going short. And the same analysis can be applied to the NASDAQ. As you can see, it hasn't moved too far away from the 50-day moving average, with it trying to nudge up through that level today. Same scenario. If they take this higher, doing a bobble breakout on the NASDAQ, that's a good implication that we're going to be in wave 3 to the upside, more bullish market. On the other hand, if they start backing off from here, a good indication that the 50-day moving average is continuing to act as a resistance level. You start taking profits on long positions and maybe add some short positions to the portfolio. But as long as the indexes continue to trade above the T-line, it tells us that there's not any major selling going on in this market. This allows patterns, such as big fry pan bottom breakouts, as in our recommendation on OXN, continues to work because there's no selling pressure. And what do we expect coming out of a big fry pan bottom? Strong upside potential. That same scenario can be applied to stocks in the gold industry. With gold trading higher, we can see how AU broke out of this fry pan bottom and then created a J-hook pattern. And when you can put the individual elements into a trend analysis, such as a doji gap up, your best friend, doing it right here, creating a J-hook pattern, this implies there's still a lot more upside, wave 1, wave 2, going into wave 3. Again, the analysis of these patterns are merely the expectation of what human nature does time after time. All we're doing is learning what that expectation is. And you can easily pinpoint which sectors have the strongest upside potential just by the identification of the signals that are created in individual ETFs, such as LABU. LABU is indicating that the biotechs are going to act strong because, notice this signal right here. Opens here, closes here, gaps up the next day and goes the opposite direction. A kicker signal, which is one of your strongest, if not the strongest candlestick reversal signal, implies that there's been a dramatic change of investor sentiment breaking out through this resistance or this congestion area, which tells us that we want to start looking at biotechs because that whole sector is telling us there's some strong buying coming in. This is not rocket science. This is merely identifying where the strength of individual stocks and sectors are being created by the graphics, the candlestick signals. That'll be it. We'll see you in the chat rooms.